Hey everybody, it's Marianne with Experian, and today we're talking all about gap insurance. Car accidents can be really stressful, especially if you're left with injuries or unexpected expenses. And here's the rub. If your car is totaled, you'll still be responsible for paying off your car loan. And that can cause a lot of financial stress, especially if you owe more than your car is worth. But that's where GAP insurance, or Guaranteed Asset Protection Insurance, comes in. Let's talk about how it works so you can decide if it's worth the cost. In the event that your car is totaled, the insurance company will determine the vehicle's actual cash value, or how much it's worth after factoring in depreciation. GAP insurance is optional coverage that covers the difference between that amount and how much you owe on your auto loan. And without it, you could be on the hook for a big bill. Here's a quick example. Let's say you get into a crash and your car is totaled, and the insurance company puts the actual cash value at $30,000. The problem is that you owe $32,500 on your outstanding loan balance. GAP insurance would cover that additional $2,500 so that you can pay off your auto loan in full. Now let's talk about the cost. The national average varies, but most major insurance companies charge around $90 a year or $7.50 per month for GAP insurance. But how much you actually pay will depend on where you live and the value of your car. There are 3 ways to get GAP insurance. The first is to simply add it to your existing auto insurance policy. The second would be to buy a new standalone policy. Alternatively, you could buy GAP insurance through the dealership when you take out a lease or buy a new car, but this is usually the most expensive option, so keep that in mind. GAP insurance has its benefits. For one, it's pretty inexpensive, and you'll have peace of mind knowing that your risk of financial loss will be lower if your car is totaled in the future. And you can always cancel once your loan balance dips below your car's current value. But there are some potential drawbacks. GAP insurance does not cover damages or repairs if your car isn't totaled, so in that way, coverage is kind of limited. And it can also be a pain to cancel GAP insurance, especially if it's tied into your auto loan or lease. So do you need GAP insurance? Only you can answer that question, but it might make sense if you put down less than 20% when you bought your car. You have a loan term that's 5 years or longer. You expect your car to depreciate quickly, or covering the gap yourself would cause financial stress. But you might skip it if your car is worth more than your loan balance, or you just feel comfortable going without it and covering the cost yourself if your car is totaled in the future. For more on how GAP insurance works, follow the link in the description box. See you next time.